When Mitt Romney released his 2011 tax returns in late September, it was a widely reported news event. However, most of the coverage seemed to merely state how much he made, $13.7 million, and he paid an effective tax rate of 14%. His tax return, as published on his website, is 379 pages long. So let's take a closer look and see what else we can learn besides the fact that he's wealthy. Here's what we already know. He made $13.7 million and paid $1.9 million in taxes. That's a tax rate of 14%. We also know that he donated $2.25 million to charity. If you combine the amounts he paid for both taxes and charity, the total is $4.2 million, which is a combined rate of 31%. To take a closer look, let's draw the 4 quadrants of earning money. On the bottom right, you have the employee quadrant. This is when you have a job and your income is typically reported in a W-2 and is active income. The highest marginal tax rate for this category is 35%. The next quadrant is self-employed. Here you work for yourself and you may file a Schedule C for your business income, which is also active. While the highest marginal tax rate may be the same as the employee quadrant, you pay both sides of Social Security and Medicare, so your effective tax rate could be higher. The third quadrant is business owner, where you employ others and your corporation files its own taxes. Income earned as an executive is active income. The last quadrant is the investor quadrant, where you make money with money. This includes items such as interest and dividends, long and short-term capital gains, income from rents, royalties, and partnerships. These are passive income. Typically, the tax rate here is about 15%. Let's populate these quadrants with items from Romney's return. First, his return shows a salary of $0. That is, he did not have a job per se and had no wages. What is interesting is that he notes his occupation as executive, which would normally fall under the business owner quadrant, but this executive draws no salary. Let's continue. He reports about $500,000 in self-employment earnings under the official classification of independent artist, presumably his speaking engagements and his book. This is only 3% of his total reported income. The other 97% comes from the investor quadrant. He made $3 million in interest, $5.8 million in combined dividends, $6.8 million in capital gains, resulting in a grand total of $15.7 million in passive income. He notes several times in his return that he is not active in generating this income. This income is only passive but mostly generated out of a blind trust. So what can we summarize? He's not an employee. He's not an executive drawing compensation for operating a business, and his self-employment earnings is fairly non-consequential. So, he's a definite passive investor, one who uses blind trust where he cannot direct or intervene. What's most striking in his return is the excessive use of foreign vehicles of income. Most of the 379 pages relates to foreign activity. His foreign tax credit filing alone claims an income of $3.5 million from various countries, too many to enumerate on the return. There are forms of transfer of property to foreign corporations, transfer of property to foreign partnerships, participation in foreign passive investment companies, and several specified foreign financial assets. To summarize, he's a passive investor, mostly blind and often foreign. The questions then are, how can one take credit for actively creating jobs while claiming passive status and using blind trust at the same time? Isn't such excessive foreign investment over local choices a leading cause of our poor economy and disappearing jobs? Where's the proof in this tax return that his specific directed financial activity actually created local jobs? How does the ability to seed money and make money from blind, passive foreign investments qualify one to be President of the United States? Can we afford to place the United States in a blind trust? Please vote and make your voice heard on November 6th.